All right, everyone. Thanks for joining us. I'm excited to introduce you to Mark Annese. He's the president of Retirement Advisor Pro, and he also was one of the founders of the IRMAA Certified Planner designation. He's got some really good insight. Super smart guy and very technical. He could see the challenges and the deficiencies of Social Security and IRMAA and Medicare planning softwares, and decided to fill the gap and develop a new solution. And that's what we're going to be taking a look at today. And so hopefully everyone will find this useful. And if you guys have any questions or anything, just drop those in the chat, and we'll have a little Q&A after Mark takes us through the software.
Great. Um, Thanks everybody for joining me. I see a couple familiar names here. Uh, what we're going to do is we're going to kind of go through a little bit of what the software does, some little pieces here and there, as well as some of the examples. I've been posting a couple examples on LinkedIn, so you may have seen those, and we're going to go through those and flesh those out a little bit. As we go through, I'm going to stop periodically for people to ask questions. So feel free to ask any questions you have on things. A little background on me. Again, I've been doing this for quite a while. Started kind of talking about the IRMAA situation about 12 years ago, and we built the first IRMAA planning software about 9 years ago. Unfortunately, back then, this is my favorite line of trying to talk about IRMAA about 9 years ago was like trying to sell a fax machine in 1978. No one cared and no one knew what it was. So fast forward now to where we are, it really is a big piece of conversation through people and through clients. And we're also seeing a lot of clients that are talking about it before their advisors are actually even talking to them about it. So what we did is we came in and we decided to take what we have for the software and really do kind of three simple things for it. We wanted to provide a platform that flattens a technology stack. So I'm talking to advisors every single day that have 9 different pieces of software from CRM to AI onboarding to Social Security piece, an IRMAA piece, cash flow planning, all these different pieces. And they're spending quite a bit of money on it. So one of the biggest drives of this was to take what we had as a traditional IRMAA planning and bringing it in and kind of help people flatten that technology stack and giving you IRMAA planning, giving you Social Security planning, cash flow planning, and all really the tools that advisors need in one spot. That saves you time. It gives you a better federated way of presenting information, as well as your investment in your technology stack goes down. So we did that. We also wanted to make sure that we're giving people a quick and easy way to really model out the IRMAA, the Social Security cash flow, and everything like that to make their conversations a lot easier with their clients. And finally, what this allows us to do is taking this platform, and we'll talk about customizations in a little bit, is taking this platform and allowing IMOs or larger firms or carriers to take this and create it as a foundation to build upon after that. So we do some customizations for advisory firms that have multiple advisors, so it fits into what their flow actually looks like. Now, before we jump in, give you a couple things on what this thing does. So when you are signing up, you get unlimited clients, unlimited scenarios, unlimited reports. We have Social Security optimization, year by year retirement income and expense flow, Medicare Part B and D year by year cost analysis, IRMAA planning optimization, gap analysis, customizable scenario comparisons. If you need some sort of audits for compliance, we have activity tracking. We also have advisor white labeling, and we have a bunch more on that. So we're going to go through these kind of step by step. And again, if you have questions along the way, please feel free to ask. Now, we've already talked about the customizations quickly. We can talk about that a bit later. So we're going to jump into this. Let me move my screen over here. All right, and everybody see this? So this is what you'll see when you first log in. You're going to see the dashboard of all your recent clients as well as active onboarding sections. Now, an active onboarding session is being delivered in Q1. We have a bunch of advisors that have been doing testing on it, and that's basically your AI onboarding, which which allows your clients to onboard themselves. Doesn't give them reports, but it really brings down the amount of time you're spending onboarding clients for information from them. Along the left, we have your dashboard, you have clients and tasks. There's a couple other things in here that because I'm a administrator, you see. But we also have training resources and videos of support. So you have that. But if we go back, I'm going to start by showing you a sample client that we're going to walk through. So this is someone who's single. We're going to use this as kind of a jumping off point to show how we really model things out and how easy it is to jump from a baseline scenario into solution scenarios. Before we do that, when you look at this page, you have your overview, which is client information. You have your list of financial scenarios, which gives you kind of a little baseline of what that particular scenario does. You have the ability to see a comparison report where you can compare the scenarios, and we'll get to that piece after. We have three little buttons over here. We had seen a lot of advisors were jumping between applications simply to do calculations. So we have your ability to do a calculator right here to do a quick calculation, the ability to see federal and state taxes right here, as well as quick reference for IRMAA brackets. So if you're dealing with a client, you have a question, pop it open and you have the information there. We're going to jump in to the first scenario here, and this is going to be, I will show you what we're looking at. So this particular person, we're calling this a $750,000 401k scenario. They live in Massachusetts. And again, you can name the scenario to whatever you'd like. We're going to put in what their Medicare start age is and what their lifespan is. Then we can start throwing in retirement expenses. So this is the area where it gets into doing more cash flow planning. You can put start and end dates on the expenses, maybe their car payments, stuff like that.
Hmm.
But you're able to put all those down. Then the next piece, we have tax settings. So if you're going to do your standard deductions, you have these put in here. You can also override them as well as put inflation rates. If the scenario you're doing is for a married couple, we have the ability to turn on and off surviving spouse takes the higher Social Security benefit. Now, logic dictates, well, of course, you want to give them the higher benefit. But we've actually seen in certain situations when the surviving spouse takes the higher benefit, they actually get bumped into a higher bracket of tax and IRMAA, which ends up costing them more. So you have the ability to model with or without that. And finally, in this little area, we have the Social Security adjustment based on what the administration decides to do. If they decide to say, in 2030, we're actually going to take a deduction out of your Social Security benefit, we can say, well, that's going to be a percentage or flat amount and put the amount in there. So this again is going to be to model out if anything happens where they're going to decrease that Social Security benefit. Well, we're going to turn that off. Moving down, this is kind of where the rubber hits the road here. We have your retirement income. You have 5 different pieces here. So security, pension, wages, rental, and other. The first 4 are pretty self-explanatory. The other, that is to help model things like a sale of a home, sale of a business, just different things like that that don't fit into the 4 buckets. This person has just the Social Security. We're going to have 4,500 at FRA. Claiming age is 65, and we're just going to throw a 2% COLA on that. If this person was in a couple, there's a drop down here that you get to choose the person. For the investment accounts, this person has only a 401k. So we're going to just take a look at that. What this allows you to do is you have the account owner, you choose who that is, then the account type. So we have all these different types, and they have all the tax rules in there for each one of them. For this one, we just named it 401k. We can name it, whatever we want there. Put the current balance in, your estimated rate of return, and then your risk profile. Finally, your monthly minimum withdrawal. Then you choose the age you want to begin withdrawals and if we're contributing or not to this. So what this does is we don't need to know what their ending balance is when they retire. We just need to know what the balance is now, and then we calculate that out for you. But we get this little handy graph down the bottom. So sometimes you're trying to figure out how much money can I actually take out of this thing. So right now we can see based on this configuration, if we take out 2,500 a year, a month, and RMDs hit, we're still going to have a bunch of money at the end. So maybe we can want to pump that up to 7,000. We're still going to make that. But what happens if we only get a 6% return? A little bit less. If we do a 5% return, then you even have more. So you get to see how you're actually modeling what you have the ability to take out of something right up front without having to kind of go back and forth with things. So we're going to cancel out of that. And then we have your annuity contracts. The one I like to show here is if we were going to do a MIGA. So if, let's say we take a MIGA, throw some money into it. You can choose the qualified status of that. When the premium amount happens, or what the premium amount is, what the issue age is, and then what your guarantee is. But the piece we like about this is what happens at maturity of that MIGA. Well, we can convert that right to a SPIA right away, and this will model that whole process out for you without having to really kind of jump through too many hoops. But we're not going to have that one on this one. We're just going to stay with your Social Security. We're going to stay with the 401k, and we're going to walk through kind of what this stuff means. Finally, down the end, we have your Medicare Part B and Part D. You get to choose the inflation rates here based on what time frame you want. I typically just put it down since 1966 of inception, and that's about it. So it's super simple to put in. It's super flexible, and we hit save scenario, and then we get our scenario. So I talked briefly about customizations. So this is the canned scenario overview for advisors. When we get into customizations, we can take this page and customize it so it works a little bit more with your workflow. It's like, what do you present to your client on your first, second, third meeting? And then we can add it into this so your scenario overview is customized for you. But we're going to take a look at what this one does. So based on the information we put in, we had a $4,500 Social Security benefit. We had $750,000 in a 401k that had a $15,000 per month, I'm sorry, per year contribution and is growing at 70%. So when this person retires, they're going to be paying 1.1 million in federal and state taxes. Their Medicare costs are going to be 816,000. Now, how that's calculated, that is your base Medicare plus any IRMAA surcharges and any inflation on those costs. This doesn't mean you've seen a doctor, you haven't taken an ambulance ride, you have not purchased any prescription drugs. This is just your base premiums and your IRMAA surcharges. The last number we have here, the Medicare out-of-pocket number, is one people do not want to see. That Medicare out-of-pocket number means, and everybody on this call has probably heard this, Medicare premiums and IRMAA surcharges are deducted by default from your Social Security benefit. Right now, if you're looking at your Social Security increase, that's probably going to have a COLA of around 2%, 2.5%. And we're looking at an average of 7.3% of inflation rate on your Medicare cost in your IRMAA. Now, at some point, your Medicare and IRMAA costs may outpace your Social Security benefit. So in this particular case, and we'll show you in a second, this person has completely lost his Social Security benefit at some time in their retirement, and now they have paid $5,000 out of pocket to keep their Medicare and to keep their Medicare benefits. And we'll show you how that works in a little bit. So let's go take a jump into financial overview. Now we have the ability to look at your gross income, net income after taxes, and remaining income. And then your bars would be your taxes, your Medicare, and your expenses. And your Medicare bar, that includes any IRMAA. And the first talking point for a client is right now, 39% of your gross income is taken up with taxes and Medicare. So you have your gross income 5 million, your total taxes is 1.1, total Medicare is 816, leaving a net income of $2.9 million. Now, to back up this stuff, one of the things we hear a lot is some of the pieces of software out there are great visuals, but they don't give you the backup wherein a client asks you to dig down a little bit. So when you go down here, you can actually see year by year on what's kind of going on with this particular person. Every time you see an orange line, that is an IRMAA bracket. So this person has hit IRMAA 3 times. But what we want to look at here, as you scroll over, Every time you hit an IRMAA bracket, you have a little info button. So we hit that info button. This person had 190,000 in modified adjusted gross income, and the bracket is 168,000. Right now, we know the bracket is 109. So why did it take that long to hit that bracket? Every single year, we're also inflating these brackets by 1%. So that's keeping up with the inflation of it. So now this is a true look at when this person will hit it. It just doesn't stay stagnant at 109 every year throughout the scenario. So it gives you a better look at how it works. The next piece we want to look at is what happens with Medicare and IRMAA. Now, looking at this, very easy to see. Your blue is your Part B, your turquoise is your Part D, and your gold is your IRMAA surcharges. Typically, they kick in this person during your RMDs. But the next talking point you have for your client is, well, your total Medicare cost is 816,000, but 52% of that is an IRMAA surcharge.
Jesus Christ.
So that means you actually have the ability, hopefully, to do something to negate that. So again, this becomes that talking point of, well, we have some money in here that we can probably do something with. If we scroll down, we can see year by year what goes on. Your Part B, your Part D, and then your IRMAA surcharges don't really start until age 77. So this person, they had their RMDs didn't start really getting in the way until 77. You can start seeing what happens. Your total Medicare goes from 12,000 to 24,000 in 1 year. And when we talk about unforeseen expenses, this is one of those unforeseen expenses. And we're going to talk a little bit about a gap analysis later on to show a little bit more of this. But again, it shows every time you hit an orange line here, that's an IRMAA bracket. Let's look at the Social Security overview. So we talked about this guy loses some money. So you have your blue line is your primary benefit, the primary's benefit. Your turquoise line is your remaining benefit after your Medicare expenses come out. So you can see there's a couple times is that line jockeys down here. That's because they hit IRMAA brackets. Here, the very last year of retirement, we had at 90, actually the last 2 years, they're below the axis, which means they no longer have a Social Security benefit. So total, they're doing 387,000 in Social Security taxes alone. Total Medicare costs are 816,000. Medicare out of pocket is 5,000, but let's see how that works. Your Social Security benefit is 54,000, Part B 4,500. We're going to stop here. Why is it 4,500 when right now we know it's 202? 202 times 12, but then you have to every year add in that that inflation rate, that 7.3% that we chose, and that's how it gets to the 4,500. So the total Medicare for this year is 6,000. The remaining SSI is 47,000, and our federal tax is $5,200. Now note, this federal tax is calculated off of this benefit, not what's left after Social Security, not what's left after Medicare comes out. So 44% of your gross benefit is where your tax comes from. When we start scrolling down a little bit more, we have down here, the problem starts. Well, it doesn't start, but it ends. Person has $86,000 in a Social Security benefit. Your total Medicare, which is Part B, D, and IRMAA surcharges, is $87,000, which means they're in the negative for $343. Now they're writing a check to the government for $343 that year. Now they're also paying $25,000 on taxing on 85% of this number. So just to go back, this is their Social Security. This is their IRMAA. They're not receiving a Social Security. They're paying $343 to retain their Medicare. And on top of that, they're paying $25,000 in taxes on a benefit they're not receiving. So this is one of those things that a lot of those higher income earners, people in their 50s or 60s that have at least 750,000 in their 401k may end up hitting. And so that becomes an opportunity for you to work with this client and probably tell them something they haven't heard before. If we move down to we'll go right to our stress test now. So if we go to our stress test, this is an easy conversation to have with clients. really lays things out really easy. So this particular person has an IRMAA stress score of 64 out of 100. What that means is we deduce that from four different types of things. We have your bracket factor, which is how many brackets you traverse in IRMAA, the duration factor, how long you're in IRMAA, controllability, which is what do your assets look like, and can we use some of those to control this or these IRMAA surcharges, and then timing factor on how quickly do they get into IRMAA. Right below that, it tells you when you get into these IRMAA brackets and where you go. 2047, we go from tier 0 to tier 2. 2053, tier 2 to tier 3. 58 from tier 3 to tier 4. They're in IRMAA. I'm sorry, their lifetime IRMAA cost is 422,000. They're in IRMAA for 14 out of 26 years, and they lose 45% of their Social Security to Medicare costs. Again, base premiums and IRMAA surcharges. Your your graph here shows your dotted lines. Those are going to be your IRMAA thresholds. You can see they increase year by year, as well as the blue is going to be your income. So you can see how quickly that shoots right through all of those different brackets. So now let's look at your interactive cash flow. This will show us what's going on year by year in detail. So we start by seeing this green line up top. That's your retirement, the whole retirement arc. You can scrub along and see what happens. So we click on a day, we can see, or a year, you can see what the income's doing, what the expenses are doing, taxes, Medicare, and assets. And if you want to dive down, if you're talking with a client, just click and you can see what the assets are doing. You can see what your expenses are doing. You can see what your Medicare is doing. Your R is an RMD, but the I, that's when you hit an IRMAA bracket. So if we look right now, we have 93,000 total income, 10,000 in your Medicare. But as soon as you hit an IRMAA bracket, now you're adding 12,000 back on. And then you can see that keep increasing as you go. So it's an easy way to show a client year by year what's going on with their income and their cash flow. The table down here, this is the gut check table and the detail table, and allows you to see exactly what's going on, where your income is, where your assets are, what happens with your RMDs. We have all the tax phases of AGI, standard deductions, taxable income, your federal tax, state tax, marginal rate, effective rates, and MAGI. After that, we have the Medicare broken down by your Part B, Part D. It also shows when you hit IRMAA, what IRMAA bracket you hit, and then what your total IRMAA cost is. And then finally, we see your income phases of gross income after tax, after Medicare, then your expenses, and then finally what's remaining after that. So it really gives you an idea very granularly of what's going on with this retirement plan, and you can export that out to an Excel file. I am going to jump to the Social Security claiming. I'm actually, you know what, I'm going to go back to this later. It's better with a couple, but just quickly, you can scrub along and see. Obviously, people have seen these heat maps before. The higher you get into retirement, obviously, the more you're going to get with your total lifetime benefit. One thing that software does miss is this is your gross benefit. This has nothing to do with the IRMAA that comes out because of all your other income. So if we hit this little toggle here, then we can see, well, if we chose at 70, we have 1.9 million, we have 489 coming out, you're left with 1.5 million. If we go down 1 year and take it at 69, you can take it a year early and you're actually making 2 grand more for the year just by waiting a year. So this gives you a better idea of what actually happens when you have a lot of income and how it's going to impact that Social Security benefit and when you're going to claim. So I'm going to jump back. This was our original scenario, but let's say they want to look at a Roth conversion. So someone asked about a Roth conversion. We're going to hit this piece right here. We're going to go and create a new conversion. What happens is once you jump on this page, any asset that's convertible will show up here. And all you need to do is put in the amount you want to convert. We're going to do a very simple one. We're going to do a convert of $750,000. We're going to do it 1 year this year. If you had multiple, you could do multiple amounts starting at different years and do the duration for different years. Now this is your summary of what you chose to do for the different types. Then finally, since we're doing this pre-retirement, in order to get that conversion calculation right, so it's just not in a vacuum, we need to add in some pre-retirement income. We're going to put a growth rate maybe to match that 401k. We're going to take out $50,000 a year, and we're going to start taking that out when John retires. Now we're going to hit calculation. This is going to show us everything in blue is before conversion. So before conversion, we had 2.7 million in RMDs. After conversion, we had nothing. So we all know that RMD is really kind of a killer here. So what happens before retirement? I'm sorry, before conversion, we had 1.3 million in state and federal taxes. After conversion, we had 572,000. Before conversion, we had 422,000 in IRMAA surcharges. After conversion, we had nothing. So for a total, before conversion expenses 1.7, after conversion expenses 577. We spent $257,000 to get a projected savings of 1.1 million. And that's a conversation a lot of clients enjoy having. So now that you've done this conversion, the client tends to ask, okay, well, that's great. Now prove it. So we go down to your before conversion tab. So this tab is the table you saw in the asset tab, and it shows everything that happens right now in the scenario as you added it. Again, it's a complete duplicate of that, but we want to see what happens after conversion. So this is the year by year. We said we wanted to do a conversion in 2026. We wanted to do a $750,000 conversion. As we scroll over, we see the AGI bumps up, MAGI bumps up, taxable income bumps up. Then your conversion tax, we know what that is now based on the calculation. That's your cost. That's your $257,000 cost. Federal taxes, state taxes, you have your marginal rate and everything else. So now we can see that those RMDs, they don't hit at all. So they're not even becoming a factor in calculating taxes or calculating IRMAA. You have IRMAA in 2 years here. The reason we have IRMAA in 2 years, this software also calculates your 2 year look back. So if we go back, this is in year 2035. We had $125,000 for 2 years in a row. So that's above that first threshold, which is why they're now getting those. So this is how you would do that Roth conversion. But let's say we wanted to model what that looks like. We go back. We're going to take a look at your conversion. So what we did here is we took 350 out of your qualified and put that in a Roth conversion. We just dumped it in there. Maybe they had some money to pay out of cash savings or something like that. But just to make it easy, we put that in there. So now we have a qualified, we have a 401k, and we have a Roth. We hit save on that. Now we're going to see, well, now we're at 423,000 for state and federal taxes. We're at 416 for total Medicare and 0 for out of pocket, which means this person hasn't lost their Social Security benefit. Let's look at your Medicare and IRMAA. They're in it for 2 years. As opposed to going back here, you can switch easily. So you went from 52% as IRMAA being part of overall cost for a cost of 422 to $21,000. Now you've also just saved that person's Social Security check. We look at Social Security. The final year, they have $36,000. When you did it before, the final year, they had negative 4,700. So this is an easy way to look at this. The next thing we look at, we're here, is when we go to doing a gap analysis, and we need to look at what the real gap analysis looks like. This is what it looks like with Medicare put in place. So your orange is going to be your expenses. Again, you can add those in when you're doing the creation. And then the gold, that is going to be your Medicare. And you can see that increases because it's not a flat number. This person's hitting different income brackets so that Medicare is increasing quite a bit. So when you're having the conversation now with the client on the guaranteed income, what happens if that 401k doesn't make it? Well, this is what you're going to look like. So now this is a very easy conversation to say, now we have this gap. How are we going to, number one, replace the income that's being lost on the Social Security benefit because Medicare is taking it out and give you a stable amount of income throughout retirement? And that's that first step into having that annuity conversation if they want to lower their risk tolerance. So let's take a jump over here. So now we have, actually, I'll show you what the annuity one looks like as well. So when we look at the annuity, that also helps out as well because it's starting to smooth out what this person has for income. Where I'm going to go, I'm going to go here. The annuities, very little in IRMAA surcharges, which is fantastic. They save their Social Security benefit. Still that's at 46,000. So putting an annuity in there also helps out with a lot of this and allows you to model it. But I want to see everything in one place so I know what I'm talking about. I'm going to go to comparison report. Now I can list these things side by side so I can see, well, if I don't do anything, I'm paying a lot in taxes, state taxes, Medicare costs. Social Security benefit, my net is the lowest. And you can go through, stack these side by side, and then say, okay, well, show me the worst, or show me the best in green, or just highlight. Then you can download and save this to give to the client. So this gives you a very easy way to do a side by side comparison for people that really need it kind of right in front of them. Now, I want to jump over quickly to a couple. So this is one of the examples that I had listed online for people to see. When we go to Social Security claiming, again, everybody's seen these heat maps. If we were to do claiming at 65 and 65, we're getting 2.8 million. If we went all the way up to 70, we'd get about 3.1 million. But again, this is in a vacuum. This is not showing what IRMAA is going to do to it. We add in IRMAA. Now your heat map changes drastically. If you actually wait to 70 and 70, you're making less than if he took it at 69 and she took it at 70. So you're making, I mean, it's not a ton less, but you're still making about $1,000 less. But it also allows you to say, well, maybe if we take it even earlier here, so now 68 and 68, 2 years ahead of that 70 mark, because I'm in a different IRMAA bracket, I'm making 2.8 million. I'm losing $4,000 a year. So now you get to really model out to a client and say, you don't have to wait until 70 to get that break even in terms of the amount of money. You can take that earlier at 68 and 68. So it gives you a better idea on what a true look at what a claiming strategy would be, because now you're including these costs that aren't really being modeled elsewhere. Um, the other thing we look at, I'm going to go back to here. So let's talk about the widow's penalty. So this person, if they both live until 90, they're in pretty good shape. They have 130,000 in total IRMAA surcharges, not amazing, but not bad. And their total Medicare is 919. What happens if one of them only lives till 75? Triple the IRMAA surcharges, same Medicare expenses, because there's only one person on them. This person is now in a single IRMAA bracket as well as a single tax bracket. So now you can go back, look at these and say, all right, if it lives till 70, 1.1 million in taxes, 916 in Medicare, but look at your Medicare out of pocket, 30,000. So that means his Social Security was fine. When you go to hers, last 3 years, paying 5,700, paying 10,000, paying 14,000. And then on top of that, 22,000, 22 and 23 for taxes. So this helps really illustrate what happens with that widow's penalty in terms of what their assets do. So that again, it's very easy to go back and look at your comparison scenario and see what ends up happening. So when we take all of this together, it really does help people combine a lot of their planning into one place. So you're seeing it all in one place. We also have the ability to look and do your white labeling and branding and stuff like that. But again, we talked about when you get to things like this particular page, how does this update into customizing for what you're doing, what your workflow is doing. So what I'm going to do is I have some questions here. I want to get through some of these questions. Jason, I don't know if you have other ones.
I don't think
Okay,
so,
so it's
Mark.
just in here.
Yeah, there was one in Q&A from Chris. Yes.
So, so if you're gonna do, great question, Chris. So if we're gonna do a problem with an LTC event, this is gonna be modeling essentially that expense of it. So you can just go in here and drop an expense and say, you know what, let's say there's an LTC expense that's going to be whatever it is monthly, and let's start that at 2050 and go to 2060. So then if we save that and we go to our financial overview, we can see it pops up inside your views there and inside your expenses here. So that's how to quickly model that piece of that. Uh, Roth conversion, Matthew, we went through the Roth conversions. Curtis, yeah, we're gonna get it. We'll be recording of this. What else? So Matt, the annuity income is treated as normal income. S- It has all the different types of tax rules in there. So if it comes from like Roth, then it's not being treated as normal income. It's just being treated as taxable, non-taxable income. So I guess I'm going to throw it out to the group, which is it's a good sized group, so it'd be manageable. Who has any questions about what we've gone through? Any questions on how things work or where numbers come up from? And feel free to kind of raise your hand here. Mitch raised his hand. Mitch, did you have a question on something? No?
You can unmute Mitch if you'd like to ask that.
Oh, I think I lost him.
He just jumped down. Oh, maybe he lowered his hand, I think is what happened.
Oh, okay, great. Nope. Okay, no
Thank
worries.
you.
Is there a printable version of Social Security filing strategies? So what ends up happening is you can download these. It comes into it's not set up on this particular one, but you can just download whatever you choose and it comes into the larger, let me show you quick, the larger PDF. So the PDF that downloads, it has pretty much everything in here, as well as the very last page is going to be that IRMAA stress test that you can use. So we have that. Was there anything else I wanted to look at here? So again, if we're going to do next steps on this, we have questions. Any questions, again, we're available. You have my email here that's available. Matthew, is there a way to model using a bonus annuity to offset the tax charges? Great question. I'm going to go in here. So you can put your different contracts in here. That one will not have a bonus. There's the bonuses. Guaranteed. There's no bonus on that one. There's a premium bonus here. So yeah, you can add it. You can add those to your FIAs. Was there a per user charge as well for the program? So for each individual person, this is a $99 per month subscription, or it's $950 per year. Because of the partnership that we have with the NSSA, this comes down to 395 for the year. Is there a way to show detail for how much tax income plus IRMAA someone will pay across 30 years starting in age 65? So if we go here, if you look at Medicare and IRMAA, your number's right here. Joy, we I have no idea what happened on that one, but if you have an issue, just please let me know and I'll definitely walk you through that. I'm gonna get back to Eric. So Eric, does that answer your question? So that 49,000 is your IRMAA surcharge, and then we break it down here so you can actually see when those surcharges start and how much they are per year. Can you customize the disclosure? You go in here and you just add your custom disclosure in there.
Cool.
So that allows you to add it, and it adds it right to your your download, which I think I already closed, and it adds it to your disclosures of your download as well. So you have everything right there. We try to make sure we have everything compliant so people have their personal disclosures as well as our software disclosures on them as well. When you download the PDF, it also has all the assumptions, so that way it makes sure that compliance is happy. Any other questions that we have on this? The great questions. No? So we'll
Yeah, if
jump
anybody
back.
wants to see any kind of if you have any questions about a particular scenario that you'd like to see modeled out, we could probably accommodate that as well, right, Mark?
Yeah, we should be able to. There was a question about the annuity income is considered income, so you are assuming is being converted to a REF. No, we're not assuming. That's a great question. So I'm going to jump back here to this poor fellow. And when we go into your annuity contract, you can say where it's coming from. So that way you can the correct tax treatment comes out of that. All right. What else? What else can we talk about here? So if we look at the training and resources, yes, Joy. So we're going to be doing a lot more trainings on things. So we'd like to get at least one every other week going on. So yeah, there definitely will be those. To that point, we do have the training videos here that allow you to do everything from the platform overview, creating the clients, creating the scenarios, how to white label, scenario overview tabs, really goes through everything, as well as when you're on these pages, if you click here and jump in, you have walkthroughs up here. So each one of these scenarios has a walkthrough that'll give you information on what's on that page and how to look at a couple of those things. If we look at one of the other things I want to show is once you create a Roth conversion, it's saved and you can create as many as you want. The other thing we're looking at, might as well show you while we're here. We have a couple different things that are getting pushed out in the next probably 2 weeks. So we want to make sure people can see these. Bear with me while I'm just bringing it up. And of course I can't do that. 1 minute here. So the biggest thing that's coming out, we can see this. We're going to do filing jointly. We're going to look to earnings test. We've had a lot of conversations around how this works. And we've talked about this, but one of the things that we're now doing is looking at how to have, again, structured conversations with clients so they don't jump ahead and they don't kind of get to the end of the story before you want them to get there. Our blueprint here allows us to have a conversation how you want to have it about what their assets and income look like. So it starts here as a couple. We want to see John's information. We want to see his income. We want to see his assets. But then I want to see the income off of that. Great. Now we can go see what Jane's is and see the income and assets off of that. Do they have any joint? Yes. Any liabilities? And we can see expenses off of that. And if we don't want to see that yearly income, we can break it down to monthly. So that allows you to really, again, toggle this on and off and have the conversation how you want to have it. And again, all of this includes being able to scrub along every year. As you can see, these items are changing and it shows you what happens year by year. So that's one of the big ones coming out in the next 2 weeks. So that'll be a part of this. And again, it'll be just right off the cash flow piece of that. Can you select how the assets are used in retirement, non-qual, then tax deferred? Great question. So let's go here. It all comes down to when you want to take them. I'm going to go back to, where is this guy? Oh, no, sorry. That's because I'm in the wrong one. So if we go back to him, what you're able to do is you're able to sequence them simply by saying the claiming age is here, but if you're doing wages, say, just use wages, for example, the start and end age on that. If you have investment accounts that don't have RMDs, you can just say, when do I want to start taking that? So you have the ability to sequence those. Any other questions here? I know we're kind of bumping up towards the end. No, I think this is great. Can you show us what report that could be printed off the PDF? Of course. So we go to actions here and you go to download PDF report. It takes a couple seconds to actually pop up and do it. This one is being every time we add a new module, the report actually has more information in it. The other part we talked about is if we go down the road of customizations, when you do that customization, we can also customize a report for you as well. So you have this page shows who presented was presented for, your disclosures. This includes any disclosures that may be your disclosures, TOC, and your assumptions. And then we go down to your scenario overview, your financial overview, Social Security analysis, Medicare and IRMAA. That's the Medicare and IRMAA stress test. So it's all right there. And again, if people are doing customizations, we can actually just take what they have and build it into this for them. So anybody else here? Mark and Jim, I know you're on here. Any questions from you guys on what this does and how it can help out what we're doing on the NSSA side?
Mark, I'm good for now, but I
All right.
appreciate you asking.
Yep, absolutely.
Yeah, I'm
Um,
good.
Jason, do you want to end up with anything? Any last words here? Well, okay, I can probably say that differently. I don't want any last words, but
Any last words? Uh,
any last
yeah,
words there, Jason?
yeah. So I think it looks fantastic, Mark. I appreciate you taking the time to show everyone. Super, super useful. We've got the discounted link in there for you guys. It's also if you go to the member library or whenever you log into the site, you'll be able to see the discounted rates. And if you need any direction on that, just let me know. I've also posted a link to the IRMAA training, the IRMAA Certified Planner training. NSSAs get that at 50% off. So yeah, I mentioned in the chat if you're feeling like, okay, I need to understand this better, that's an awesome place to start. And then, start leveraging the software to help, paint a clearer picture for your clients and save some money and increase your retention, right? Because that's going to be, when you save them 100K and then they go tell their friends, it's pretty powerful stuff.
Great.
All right.
Someone had a question, Chris. Are there any marketing links? Not That's something we can talk about offline if you'd like. I think it's a larger conversation. So, Jason, I don't know if we want to just kind of ping Chris later on that question.
Oh, yeah, that's fine. Sounds good. All
Great.
right,
Well, listen.
everyone. Appreciate you joining us. We will send out a recording if you want to revisit any of this. And of course, I posted Mark's email. You can see it on the screen now. Also posted it in the chat. So if you have any questions, you can follow up with Mark there.
Great. Thank you, everybody, for your time. And again, we're here if you have any questions.
All right. Thank you, everyone.
Take care.
Take care.